US regulators are on a warpath, going after major crypto exchanges and declaring a handful of major altcoin securities, a scarlet letter in crypto terms. But crypto is proving resilient. Bitcoin is opening the Asia trading week up 0.4% to $25,912, while Ether is slightly down to $1,748. The liquidity situation has worsened considerably. This is exacerbated by the departure of institutional investors from the market, particularly US-based market makers who anticipate potential scrutiny from the SEC, said Johnny Tang, senior researcher at Bank Labs, in a note to CoinDesk. While the S&P 500 continues to achieve new monthly highs, a crypto market remains troublesome. Hello and welcome to Money Talks. In today's video, we have Cathie Wood talks about the future of innovation and her view on US inflation and more. So without wasting any time, let's dive into the video.
Many people are wondering about the true health of this market. Now, we think the resolution is going to be, and we're beginning to see it, as you say, in some of the less than mega cap tech stocks. We think the resolution is that the rest of the market will catch up if we're right on this notion that the big surprise, probably the biggest surprise out there for the second half of this year is deflation. The problem now is we had a crisis, a regional bank crisis at the end of the first quarter. A crisis always, or during a crisis, people pull back saying, wait a minute, what's going on here? Especially when it involves the banking system.
Yes.
So
a financial crisis, not a weather crisis.
Exactly.
Right.
So second quarter, it looks like M2 will be down 5% year over year. And velocity, if we want to get the consensus nominal GDP numbers, 5 to 6%, velocity will have to be up 10 to 11%. It's not going to be. So I think that's why we're seeing some breaks here in pricing. I think that what is giving way is pricing, because the consumer has been saying, no mas, we're trading down, we are not. So I think that the margin pressure that we're going to see here is going to be serious, and an antidote to that is technology, AI, productivity gains. So I think innovation solves problems. I think that's another reason our stocks are doing well.
In a note to CoinDesk, BitBull Capital's Joe DiPasquale pointed to Bitcoin's support at $25,000 as still holding up reasonably well, but the upcoming release of new Federal Open Market Committee, FOMC, minutes could change that. Moving forward, market participants will do well to keep an eye on indications from regulators and decisions taken by Binance, Coinbase, and other exchanges, he said. Economist Peter Schiff says the U.S. banking system is insolvent. He stressed that the Federal Reserve destroyed the U.S. banking system, citing near-zero interest rates at banks, while the Fed funds rate is 5.25% and the real inflation rate is much higher. Schiff previously warned that the U.S. banking system is on the verge of a much bigger collapse in 2008.
When I say of some sorts, is this hard landing pricing? Because innovation, innovation is deflationary. Right?
Yeah. Once
and you
it
look
gets
at what
adopted,
Elon's doing. You look at what Elon's doing. Everybody thinks Elon is cutting prices because demand has fallen off. And it may very well, but he can afford to cut prices because his margins are so much higher than all of the other auto companies out there. And he has always said he would. He would drive prices down in line with cost declines. Now, maybe a little bit more now because margins have come in. But this is the history of innovation. So it's very interesting. The bears in February of 21 basically said, this is nothing but a replay of the tech and telecom bubble. And they drew a chart from that point of the tech and telecom bust. And they said, this is where they are going to go.
I think I might have done that.
You might have done that. And that's what makes a market. And if you shorted us, you did very well. In fact, I think still 20% of ARKK is short. And so we actually declined more than the NASDAQ during the bust. Now, what's fascinating about that is we look at the period from 1980 through the tech and telecom bubble as the period when the seeds for all of the 5 platforms that I mentioned earlier, they were planted back then.
Rich Dad Poor Dad author Robert Kiyosaki has warned that the real estate market is on the verge of a crash that will be worse than the 2008 financial crisis. Noting that it will be the greatest crash ever, he stressed that the 2023 crisis will make the global financial crisis look like nothing. The famous author believes that the 2023 crash will be worse than the 2008 global financial crisis, GFC, and is advising investors to protect themselves by buying gold, silver, and Bitcoin. He tweeted Wednesday, "Greatest real estate crash ever. 2008 was the GFC. 2023 will make the 2008 GFC look like nothing. In 2019, office towers in San Francisco were hot. In 2023, the same buildings have lost 70% of value. Get gold, silver, Bitcoin." The renowned author has been recommending gold, silver, and Bitcoin for quite some time. He predicted in February that by 2025, the price of gold would reach $5,000, silver would soar to $500, and Bitcoin would surge to $500,000. Explaining his prediction, he tweeted, "Because faith in US dollar, fake money will be destroyed. Gold and silver, God's money. Bitcoin, people's money."
There was too much capital. I mean, the internet just captured the imagination, like ChatGPT is doing right now. The internet captured the imagination, and analysts started valuing companies on the number of eyeballs they might get in 10 years' time. Something crazy like that. Too much capital chasing too few opportunities too soon. Why? The cloud didn't even happen until 2006, AWS. The first big breakthrough in in AI, deep learning, did not happen until 2012.
Right.
The second big one, transformer technology, natural language processing, which is ChatGPT, which is why we're going to see autonomous driving, that did not happen until 2018. Now we're ready for prime time. What's fascinating, this is going to go down in history, I believe, as a behavioral study, an investment behavioral study to beat all investment behavioral studies. They rushed in the 90s. That ended badly. A lot of the portfolio managers today were young men, and they have that muscle memory, and they remember how maybe their bosses were thrown out or whatever. I've been here before.
I remember. It's my formative memory.
Exactly. The last time I heard that expression, exponential growth trajectories, was back then. It ended badly. What are they doing now? We are in a very bearish moment for the market generally. If you look at cash on the sidelines, if you look at how hedge funds are positioned, no one's optimistic. And so our bet, and consider the source, our bet is staying away from these stocks now is going to end badly, and sticking with the benchmark. So they're running for their benchmarks because they think that's where safety lies. The benchmarks are what's going to be disrupted by this massive convergence of innovation platforms.
So is it a good time to invest in Bitcoin? And what's your prediction for Bitcoin in 2023? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.